On Tuesday, the major U.S. stock averages are mostly hugging the flat line. We're seeing some action for the Nasdaq, but for the most part, key events later this week are awaited. Joining me now is Alan Valdes of SilverBear Capital. Alan, great to have you here.
Great to be here, Remy.
Well, we are awaiting key events later this week, including Yellen's testimony, economic data, as well as more earnings. But we do have to keep in mind that while we're watching Washington, D.C., we also have a lot of meetings taking place on Capitol Hill, given that Congress is back from recess. But in terms of what we're seeing on Wall Street, what do you expect to see later this week?
Well, the big enchilada this week is going to be Thursday and Friday when we start getting those bank earnings. I mean, they have enough juice to really move this market. But I think we're going to have a good quarter, a good second quarter here. If you take a break and walk back and catch your breath, I mean, the numbers are good. The jobs numbers last month was great. The revisions from the previous 2 months were good. The ISM, the GDP numbers are rising. Earnings forward on the S&P 500, 400, and 600 are projected up as opposed to the last 5 years. So overall, things are going our way. Yeah, there's a wall of worry. There's always a wall of worry. But I think in general, we'll have a pretty good summer.
And indeed, when you say worry, we'll continue to monitor geopolitics because there's a lot happening around the globe. But meanwhile, here in the U.S., Amazon Prime Day has been grabbing headlines. So, Alan, what do you make of what we're seeing in terms of retail stocks, both online and brick and mortar?
Well, I think the brick and mortar is telling. I drove past a mall this weekend, and it was a nice weekend, a nice Sunday. It was empty. Not like it was closed for blue laws. It was just empty. So I think they're having a tough time of it. And you're seeing more and more of these huge retailers like Walmart morphing to an online type of basis. And you look at some of the deals being taken place. They're falling apart now, the mergers. So I think it's going to be a tough go for brick and mortar. And that's my feeling. I really do. I think it's going to be tough.
And of course, as you mentioned earlier, we'll be waiting Janet Yellen's testimony before Congress tomorrow as well as Thursday. But what key tidbits will you be waiting for?
Well, we want to see her feelings on rate increases. I don't believe rate increases are that dangerous to the market. If you look when we started the rate increases 5 years ago, okay, the S&P is up 28% since then. So, to say the rate increases are going to stagger the market, I'm not a big believer in that, but what I am concerned about is shrinking the balance sheet. They've always had a tough time doing that, so we got to be real careful there. That could really throw a monkey wrench into this rally here. Tax cuts, even without the tax cuts, GDP growth for most large companies are up about 4%. Mid caps are up even 10%. So I'm not worried about the tax cuts yet. I'd like to see them pass, but I don't think it's going to affect the market that much.
And last but not least, Alan, before I let you go, I do want to continue to look at the macro picture. Now, bond yields have been rising, and that has been weighing on some currencies. But what do you expect to see going forward?
Well, the bond market's been very convoluted. It's acting just the opposite of what you would think it would act. But I think we're going to see the bond yields continue to rise here. And it's just, one of these situations where I think what's going on, and this is what I really believe, they're putting $300 billion a month into the market, the central banks around the world. And as long as they do that, no matter what the bonds do, no matter what jobs, no matter what, the market's got to go up. There's no place else it's got to go with all that money being infused into the market. So I think as long as they continue that, you'll see the market go up. That's why cutting back on the balance sheet kind of worries me, because we're so used to this sugar high, you might call it, that without that, could be problematic.
Okay, Alan, as always, thank you so much for joining me, and thanks for all your insight.
Thanks, Remy.